question is, state the classification of the new office building in Sabah based on the relevant Malaysia Financial Reporting Standard, MFRS. So, the answer is, the floor building in Sabah cannot be sold separately. So, the company needs to assess which is more significant using 50% rules. In this case, the 7th floor will be let out to tenant MFRS 140, while 5th floor of the new building is used for the management activity is under MFRS 116. So now, how to calculate the initial cost of the manufacturing plant in Sabah upon the completion? First of all, a cost of construction is 4,250,000. The loan is 3 million for 5 years. Interest on loan is 7%. Date of loan is 1st July 2016. Date start the construction is 1st October 2016 and it ends on 31 October 2017. Investment loan is 1,500,000, which is half of the loan. Start on 1st October 2016. Interest on investment is 5% for 4 months. The suspension is 2 months, starting 2 February 2017 until March 2017. So, manufacturing plant in 2016 is 4,283,750, which is come from construction cost of 4,002,050 plus the borrowing cost of 52,000, which is come from 3 million times 7% times 3 over 12 months, and less investment income, which is 80,750, which is come from 1,500,000 times 5% times 3 over 12 months. Manufacturing plant in 2017 is 4,452,500, which is come from 4,283,750 plus the borrowing cost 175,000 and minus investment income 6,250.
Okay, the next question is, discuss the accounting treatment for the land received from the government based on the relevant Malaysia Financial Reporting Standard. Okay, land received by BMG Berhad on 1st July 2016 is a non-monetary government grant. A non-monetary government grant can be accounted for at nominal value of 9,000 or at the fair value of 1,220,000. If the company account for the land at the fair value, then it may be recognized as deferred income of 1,211,000. Okay, how to get the amount of 1,211,000? Okay, 1,220,000 minus with 9,000 and amortize it over 10 years. And for the journal entry is debit land 1,220,000, credit deferred income 1,211,000, credit government grant 9,000, and then debit deferred income 1,211,000 and credit SOPL income 1,211,000. Thank you. Okay, now we move on to the next question. Okay, the question is, explain the classification of the building in Sarawak during the year ended 31st December 2017, including the measurement as at 31st December 2017. Okay, the answer for this question is, the building in Sarawak will classify as PPE under MFRS 116 until 31st September 2017 because the company still use the building. Okay, the building will start classified as net current asset held for sale under MFRS 5 when it meet the criteria for classification, which is it is available for immediate sale and the sale must be highly probable. In these cases, it stated that the building is vacated and ready to sell. Okay, on 31st December 2017, the net current asset held for sale should be measured as the lower carrying amount and fair value less cost to sell. The carrying amount was 2,370,000 and the fair value was 2,090,000. Okay, how to get the carrying amount? The formula is cost minus accumulated depreciation. The cost is 2,400,000 and the accumulated depreciation 2 million plus 400,000. 400,000 is the renovation cost, and divided by 20 years useful life and times by 3 over 12. 3 months is from July to October. Okay, and then 2,400,000 minus 30,000 and you can get the answer is 2,370,000 for carry amount. And for the fair value less cost to sell, you have to take the amount of 2,200,000 times 95% and you will get 2,090,000. Okay, so since the carry amount is higher than the fair value less cost to sell, they will have an impairment loss of 280,000. How to get the impairment loss? You have to take the amount of carry amount minus with fair value less cost to sell and you will get the impairment loss expenses and it will be written off in the SOPL. Okay, thank you.
For the first question, explain briefly the criteria that need to be satisfied before expenditures can be capitalized as an intangible asset based on MFRS 138 intangible assets. The criteria that need to be satisfied before expenditures can be capitalized as an intangible asset is such as identifiability, control over resources, and future economic benefit. Identifiability is the item may be separated or capable of being separated, divided from the entity and sold, rented either individually or together with the related contract, asset or liability. It may arise from contractual or other legal rights, regardless of whether those rights are transferable or separable from the entity or from other rights or obligations. Next, control over resources is the entity has the power to obtain benefits and restrict others from access to these benefits. This control may be enforced by law or the item may be protected by legal rights, such as copyrights. As is the future economic benefits is the use of the intangible will bring about revenue from sale of product or service or a reduction in the operating or production costs.
So, the next question is, discuss briefly whether Papan Berhad can adopt valuation model for all its intangible asset based on MFRS 138 intangible asset. Papan Berhad can adopt a valuation model for all its intangible asset. There is 5 items. The first one is there is an active market for the intangible asset. The second is revaluation will be made with such regularity that at the end of the reporting period, the carrying amount of the asset does not differ materially from its fair value. The third one is entire clause of intangible asset must adopt the revaluation model. The fourth, unless there is no active market for the intangible asset. And the last one, 5, is fair value can be measured reliable.
For the next questions, explain the accounting treatment for the purchase customer list and how will it differ they were internally generated by Papan Berhad. The Papan Berhad can recognize the cost of the purchase customer list amounted to 350,000 as an intangible assets in accordance to MFRS 138 because the cost of the purchase customer list met the criteria of identifiable control over the resources and have future economic benefits, and it should amortize over 5 years. However, if it internally generated by the company, 350,000 cannot be recognized as an intangible asset and need to be written off in SOPL because internally generated customer list cannot be distinguished from the cost of developing the business as a whole.
Explain the accounting treatment for the cost incurred in relation to the research and development of BF3 during the financial year ended 31st December 2017. The cost incurred during research phase from January until February 2017 cannot be capitalized as intangible asset and should be written off in SOPL as expenses because during the research phase, there is no certainty of future economic benefit will flow to the entity. Although development phase began on March 2017, the cost incurred cannot be capitalized until August 2017 as it did not meet the recognition criteria of MFRS 138. The total cost of 400,000, which is 150,000 plus 50,000 plus 100,000 plus 100,000, should be written off as expenses in the year it is incurred. However, the capitalization may start from September 2017 when management is confident on the acceptance of the product to be sold. There is probable future economic benefit that will flow to the entity. The total cost of 130,000 need to be capitalized in SOPL and amortized based on the useful life of 10 years once the product has been launched.